John, in retrospect, it stands to reason that after the fastest and steepest decline in the history of the markets, that we would get a violent snapback, and we have. But here we are with the S&P 500 with its greatest 50-session gain in history. The NASDAQ back near an all-time high. So why is this happening? I know you've been cautious. Are we underestimating the Fed and all the unprecedented programs that they've done? And has the Fed sort of permanently distorted markets?
Well, I'll quote some of the most famous investors in the world, guys like Howard Marks and Warren Buffett, who said, if it weren't for the Fed, we probably wouldn't be here today, and from a market level perspective. And I think there's a lot of truth to that. Clearly, the governments around the world have thrown buckets of money at the markets, at the economy, at individuals, and that's clearly playing a huge role. And so we've taken the initial shock of the pandemic, and the markets right now seem pretty bulletproof we've got a lot of different social unrest. The number of cases are still rising, and clearly investors are a lot more comfortable about looking over the valley and seeing what's going to be better down the road.
So it seems as if investors are looking through to 21, 2022. Is it reasonable to do that, or is there sort of a reckoning at some point where investors have to look at the structural damage that the pandemic is causing?
It's a really good question, and I think there's no question that it's reasonable to look forward, and I think long-term investors do that. But I think that doesn't mean that you shouldn't necessarily be paying attention to imminent threats or risks that exist. And also the really good part of the question, I thought, is that the structural changes that's taking place and the way you should be positioning your portfolio down the road based on these big longer-term themes that are likely to unfold over the next 5 to 10 years that are really being caused by this event.
With the combined impacts of the pandemic and the Fed, has it changed how you have to invest, or does it just add extra layers of uncertainty and complexity?
Investing is always a complex situation. That's why it's so difficult to develop, generate good returns. It adds another layer of complexity and uncertainty, both in the shorter term in terms of how long is this problem going to exist, but it also adds a great deal of uncertainty once again in terms of what kind of businesses are going to be impacted longer term, what industries are going to be permanently impaired, and what new industries are going to develop because of this situation.
There's been a lot of talk about technology and how certain trends have been rapidly accelerated because of the pandemic. Working from home is an obvious one, e-commerce is another one. So what kinds of areas, sectors, and stocks are you really excited about and looking at and maybe nibbling away at or really wanting to buy?
Well, clearly healthcare is an area that's going to be tremendously affected by the pandemic, and I think government spending is also going to really ramp up behind trying to make healthcare more efficient and more accessible for a larger percentage of the population. Sanitation is obviously going to be a huge area that I don't think is going to go away, and it has some good natural demographic trends to it in any case. Real estate. There's a lot of concern about real estate these days in office buildings and things like that. But there's probably also going to be some beneficiaries of these shifts. Industrial real estate may be a winner, may be a little bit counterintuitive, but it may be a winner because as we see more onshoring and production taking place in North America, these are also trade tension problems being reflected. Industrial real estate may be interesting. I think also the way people live and work from home, we've all now learned that we can work from home. And I think the demographic and the geographic shifts may produce some interesting patterns in terms of where individuals live and work, finding a bit more of a work-life balance, and that could have some interesting ramifications to the investing world in terms of home ownership and the investment world because of that.